Today's financial market update. The most important market insights you need to know. Market sentiment is bearish. Market is declining across major indices. Index performance, S&P 500 at 0.26%, Dow Jones at 0.52%, Nasdaq at main of 0.38%, Russell 2000 at plus 0.24%. The stock market is currently on a bullish trend, with overall sentiment favoring growth and investment opportunities. The bullish sentiment indicates strong investor confidence, particularly in tech and innovative sectors, which may lead to continued market growth. Consider reallocating funds to high-growth sectors like technology and AI, which show strong potential for returns in the current market environment. Altria Group reported a notable increase in sales within its smoke-free product range, including oral tobacco and nicotine pouches. The growth in Altria's smoke-free products suggests a strategic pivot, potentially positioning the company well in a changing consumer landscape. Consider investing in Altria's smoke-free initiatives, as they may represent growth potential amid shifting consumer preferences towards healthier options. TFI International reported over $10 per share in free cash flow for Q4 2025, indicating strong operational efficiency. TFI International's strong cash flow suggests solid demand in logistics, making it an attractive option for growth-focused investors. Consider adding TFI International to your portfolio, as its strong cash flow positions it well for future expansion and investor returns. Consumer confidence remains high, with the Conference Board's Consumer Confidence Index rising to 130 in October 2023. High consumer confidence indicates a willingness to spend, which can stimulate economic growth and potentially lead to increased corporate earnings. Consider allocating a portion of your portfolio to undervalued software stocks, which may experience increased demand as consumer spending rises. The federal funds rate dropped from 4.33% in July 2025 to 3.64% in January 2026, indicating a significant shift in monetary policy. This decrease in the federal funds rate signals a more accommodative stance, suggesting that the Fed is prioritizing economic expansion over inflation control. Investors should consider allocating funds into equities, particularly in consumer discretionary and technology sectors, which often benefit from lower borrowing costs. The U.S. economy is expected to grow significantly in 2025, supporting a robust outlook for 2026. The projected economic growth signals potential for increased market activity, which may attract investors seeking long-term gains. Consider allocating funds to technology and AI-focused ETFs, capitalizing on the sector's growth momentum and investor interest. Oil prices have surged, with Brent crude futures reaching $70 a barrel due to ongoing geopolitical tensions. The rise in oil prices may lead to increased operational costs for airlines, affecting their profitability and stock valuations in the short term. Consider increasing exposure to energy stocks, particularly those in oil and natural gas sectors, as geopolitical tensions drive prices higher. The US dollar is nearing its highest value against major currencies, reaching levels not seen in over a month. The strengthening US dollar signifies increased investor confidence, but geopolitical risks could lead to sudden market volatility that needs careful monitoring. Consider short-term currency trades that capitalize on the dollar's strength while remaining vigilant for sudden market shifts. Oil prices have surged significantly following Iran's partial closure of the Strait of Hormuz, raising concerns across global markets. Rising oil prices could lead to increased operational costs for airlines, suggesting potential volatility in their stock performance moving forward. Consider diversifying your portfolio by investing in energy stocks that can benefit from rising oil prices and geopolitical tensions. Brent crude futures have surged above $71 per barrel, reflecting heightened geopolitical tensions and supply concerns in the oil market. The rise in oil prices is likely to pressure airline profitability, which may result in increased ticket prices or reduced capacity for consumers. Consider investing in energy stocks, particularly those focused on natural gas, as they are currently experiencing strong pricing and performance. The U.S. trade deficit hit its third largest ever in 2025, indicating significant economic imbalances. The record U.S. trade deficit suggests ongoing challenges for China's export-driven economy, potentially straining trade relations further. Consider investing in AI-driven companies or sectors within China, as they show potential for growth amid recovery trends. The Federal Reserve is under pressure to raise interest rates amid ongoing inflation concerns, which remain elevated above target levels. Investors should be aware that potential interest rate hikes could negatively affect bond prices, leading to increased volatility in fixed income investments. Consider diversifying fixed income portfolios by incorporating inflation-protected securities such as TIPS to hedge against rising inflation risks. Invitation Homes achieved a Q4 2025 core FFO of 48 cents per share, reflecting a 1.3% year-over-year growth. The slight increase in FFO suggests a stable performance, yet the overall market remains sensitive to economic fluctuations and regulatory pressures. Consider diversifying portfolios by investing in companies like Invitation Homes that show resilience amid market fluctuations and ongoing demand for housing. Bank of America is committing $25 billion to private credit deals, enhancing its direct lending initiatives. Bank of America's significant investment indicates strong confidence in private credit, suggesting a shift in institutional investment strategies towards this asset class. Consider diversifying portfolios with allocations in private credit funds to capitalize on growing institutional interest and potential returns. TSMC anticipates a 25% compound annual growth rate (CAGR) through 2029, fueled by AI advancements, potentially doubling its earnings. TSMC's growth forecast highlights the critical role of AI in semiconductor manufacturing, signaling strong investment potential in tech hardware. Consider investing in TSMC as a long-term play. capitalizing on the growth driven by AI technologies and semiconductor demand. Bitcoin's price has fallen by approximately 10% over the past week, reflecting increased volatility due to geopolitical tensions with Iran. The decline in Bitcoin's price suggests that geopolitical events can significantly impact cryptocurrency valuations, indicating higher market sensitivity among investors. Consider diversifying into tokenized equities to leverage the shift towards blockchain technology, which could provide enhanced liquidity and accessibility. Halliburton has secured a multi-year contract with KS Orca Renewables to develop geothermal projects in Indonesia. Halliburton's contract highlights the growing demand for geothermal energy, signaling potential profitability in the renewable sector for investors. Consider investing in Halliburton as it diversifies into renewable energy, potentially capitalizing on the geothermal market's growth. Thank you for watching FERPA, your financial Sherpa.